Hello, welcome to Accounting 2010 Chapter 2 videos. Video 2, Analyzing and Journalizing. So in video 2, we're going to start looking at some transactions similar to what you would see in your textbook or in your problems. We will be doing this extensively in class with a packet I have created for you for Davis Consulting. This packet will follow your book. But for this example, I have created my own little project and I'll be referring to it through the next several chapters. And what we're doing is we're creating a little company called Roadrunner's Roost. You just graduated from Accounting 2010 at MSU Denver. You are a superstar. You've learned a lot about business and you've decided you are so good at accounting that you think that you can open up your own accounting tutoring service, and we're going to call it Roadrunner's Roost. And you're going to go out and you're going to get some of your friends and you're going to form this company. And you know that you're going to have to probably incorporate. You want to limit your liabilities so that you're going to become a separate entity. Remember that separate economic entity? And so you're going to incorporate, and you're also going to comply with GAAP, those generally accepted accounting principles, so that in the future, if you want to apply for loans and maybe go public, that you're going to be able to do that. So we are going to be keeping track of your books, and this is a project I'm developing for this class in future years, but for right now, we're just going to be starting to look at it. And we're going to use some of the scenarios to record some journal entries. So one of the things you want to have in front of you is this worksheet. It's going to be your best friend for the next 3 to 4 weeks until you memorize how it works. So when I'm talking about debiting an account or crediting an account and whether that debit will increase that account or decrease that account, because look, on the asset side, a debit increases an asset. On the liability side, a debit decreases. So we have to know, we have to memorize. If we say debit an asset, is that increasing or decreasing? It's increasing, right? If we say debit a liability, that means it's decreasing. So we have to learn that language. And if this is sitting in front of you, it will help you to learn the language. So the task for this short video will be to enter the initial journal entries. In the next video, we will go through and we will post the entries in a ledger and we will create an unadjusted trial balance with just a few journal entries. So step 1, we're going to be analyzing some transactions. Remember that step 1, we analyze, we look at those source documents, and we try to figure out what's going on. So these are the first source documents, the first transactions for Runner's Roost. We formed Runner's Roost in July 2015, and we do so, and I'm the one starting the company or you're the one starting the company, but nonetheless we're going to look at it from Runner's Roost perspective because it is a separate entity, and we're going to always be recording it from the perspective of the business. So July 1st, 2015, you contribute $10,000 cash. You give $10,000 cash to the company, Runner's Roost, to start Runner's Roost. And Runner's Roost, the company, is going to give you common stock. They're going to give you common stock. So the journal entry to tell that story on July 1st, 2015 is Runner's Roost got $10,000 cash, debit, you get cash, debit, asset, it goes up on the debit side. And Runner's Roost, again, we're from Runner's Roost, they're going to give $10,000 in equity. Common stock goes up $10,000. One debit, one credit, left equals right. Word debit to the left, word credit to the right. It's like a line dance. Go to your left, go to your right, one of each. All right. Now on the first, you've recruited your friend Alejandro to be a part of your company because he's got some mad skills as well. And Alejandro says, well, I don't have cash, but I could give you $5,000 worth of computer equipment if I can be an owner. And you say, you betcha, we need some computers to teach these students that we're going to be tutoring. So Alejandro is going to give, he's going to give $5,000 worth of computer equipment for the cash. But we're not doing it from Alejandro's perspective. We're doing it from what the perspective? Runner's Roost. So what does Runner's Roost get? Well, they get computers. What type of an account would a computer be? Do we like getting computers? Do we like having them? Yes, we sure do. So computers are an asset. And if an asset goes up, what do? We debit it. We debit the asset. And what did we give? Runner's Roost. We are Runner's Roost. We gave common stock. Common stock equity went up $5,000. So you can see we can, in formulating a company, get lots of things to help get that company going. And assets can come in many different forms. Let's look at another one. Now we've got Irina. Irina has got some mad legal skills. She's in criminal justice. She's got some good things about filing paperwork going on. So Irina says, well, I don't really have money, and you'd have to pay to get this company started from a legal perspective. So what if I contribute $2,000 worth of my legal expertise to you in exchange for ownership? So this would have been an expense we'd have had to pay anyways. So we can go ahead, and this could say legal services expense because we're paying an expense for formulating the company, and we're going to exchange, instead of paying cash for the legal services, we're going to give Irina common stock ownership in our company. So we can record a debit. Let's take you back to that sheet really quickly. It's an expense. If expenses go up, an expense of starting the company goes up, it's a debit, legal fees, expense, and we're going to exchange it for common stock, credit, it goes up. The journal entry will look like this. Legal service expense, 2000. We exchanged it for the asset, or excuse me, for the equity common stock. So there's another scenario of how we can analyze the transactions. Again, we're going to be doing this extensively in class with the Davis Consulting, and you'll be practicing in your homework. So I want to take you to another type of a transaction that can happen. So on the second, and this should actually read the second, we go out, we've got that cash that was contributed, and we decide, you know what? We know as students that there's going to be students who are going to sign up for our services, and they're not going to be happy, some of them, because maybe they're not going to get the grade, and not because we didn't do a good job, but maybe they didn't study enough and they didn't put the time, and they're going to want to blame it on somebody. They don't want to blame it on themselves, for Pete's sake. How could they have done anything wrong? So we're going to go out and we're going to buy some insurance, and we're going to buy a year's worth of insurance in advance. And that insurance is going to last us the whole year, but we're going to pay for it today to make sure we're covered. So how do we analyze that? Well, when we pay for something in advance, we can call that an asset, a prepaid. If I went and bought magazine subscriptions on my personal level, I'm going to get magazines for a year. I like that, but I've exchanged some cash for it. So this is an example, a prepaid. If you see the word prepaid, that is an asset. And so we go out and we prepay for the insurance. We're going to exchange one asset, cash. We're going to give cash to the insurance company to get a 1-year advanced insurance policy to protect us over the year. So here's another example. These are the types of transactions we're going to be analyzing in class. It's why it's important for you to come. We're going to work through it. Each of you will have a packet in front of you. We will talk about it. I'll ask you to contribute. I'll do it on an overhead step by step so that you can see how to analyze all kinds of transactions in our business. In the next video, video 3, we're going to go ahead and post these transactions into the ledger, into those individual accounts, and see how we are affected. So next video, video 3, posting and the unadjusted trial balance.